Choosing the best crypto futures trading platform, a guide for new and experienced traders. Crypto futures trading has become increasingly popular for both new and experienced investors. This type of trading allows traders to profit from price changes in cryptocurrencies without directly owning them. Instead, they use contracts to speculate on price movements, leveraging their capital to potentially amplify gains. However, because of the high-risk nature of futures trading, selecting the right platform is essential. Among the various factors to consider are security, trading fees, supported cryptocurrencies, and user experience. Crypto futures contracts allow investors to long or short assets, taking advantage of both bull and bear markets. In other words, traders have the flexibility to profit regardless of the market's direction. Some of the best crypto futures exchanges include MEXC, Bybit, Gate.io, OKX, Binance, Bitget, and AEVO. Each of these platforms offers unique advantages and is tailored to specific user needs. MEXC, for instance, is known for its low fees and high leverage options. This platform provides a wide variety of derivatives, such as perpetual futures and leveraged ETFs. With up to 200x leverage, MEXC attracts traders who wish to maximize gains with relatively low capital. Additionally, MEXC supports over 1,700 crypto assets, which means that users have access to a diverse range of investment opportunities. Bybit is another popular exchange, especially among beginners. This platform offers a user-friendly interface and supports various types of trading, including spot, margin, lending, and options trading. Bybit's futures trading platform allows up to 100x leverage, and the platform supports over 915 coins, making it appealing for both novice and seasoned traders. Bybit also includes features such as copy trading, where users can mimic the trades of experienced investors, as well as earning options through liquidity mining and crypto staking. Gate.io is geared toward altcoin trading and is known for its high leverage. This exchange supports copy trading and provides tools such as stop limit orders and grid trading bots, which are especially useful for automated strategies. Gate.io also supports over 1,700 crypto assets and includes DeFi earning options, making it a versatile platform for traders interested in emerging crypto projects. OKX is a top choice for derivatives and margin trading, particularly due to its strong security and compliance measures. OKX offers up to 125x leverage and supports a range of futures contracts, such as crypto and USDT margin. The platform's maintenance margin system helps prevent liquidation, making it a safer choice for those concerned about market volatility. For experienced traders, Binance is often the go-to platform. As one of the largest exchanges globally, Binance has a high daily trading volume and offers extensive features like staking, cross-chain wallet support, and educational resources. Binance's futures trading fees are also relatively low and can be reduced further with BNB rebates. However, Binance may not be ideal for US-based traders due to restrictions on its futures trading options. Bitget, on the other hand, has carved out a niche for altcoin futures trading. It supports over 550 cryptocurrencies and offers up to 125x leverage. Bitget also features copy trading, which is especially appealing for beginners looking to emulate successful strategies. Additionally, Bitget's high liquidity and security measures make it a reliable choice for crypto futures trading. AEVO offers a decentralized approach to crypto futures trading, operating as a DEX, decentralized exchange. Built on Ethereum's Optimism Layer 2 solution, AEVO allows for high-speed transactions and has low gas fees, which are appealing for traders who value cost-effectiveness. AEVO also offers pre-market trading, which is relatively unique in the crypto world, allowing traders to position themselves on future price predictions. Understanding different margin types, isolated and cross-margin, is crucial in crypto futures trading. With isolated margin, the margin set for each position is limited to that position only, which lowers the risk of affecting other trades. Cross-margin, however, uses the entire account balance as margin, meaning that gains or losses in one position can impact the rest. This option can be riskier, but it also offers flexibility and potentially higher returns for experienced traders. A key component of crypto futures trading is the funding rate, a fee paid or received by traders every 8 hours. The funding rate ensures that the futures contract price remains close to the spot price of the cryptocurrency. When the futures price is above the spot price, long traders pay a fee. When it's below, short traders pay. This mechanism aligns futures prices with the actual market. While each platform has its strengths, security remains a universal priority. Binance, for instance, has an insurance fund called SAFU to cover user losses in case of unexpected events. OKX is also known for its robust security practices, including compliance with regulations in multiple jurisdictions. Bitget uses cold wallets and SSL encryption to protect users' funds, further reinforcing the importance of choosing a secure platform. Trading fees are another critical consideration, as high fees can erode profits. Platforms like MEXC and Binance offer competitive rates with discounts for holding platform-specific tokens, like MX on MEXC or BNB on Binance. Lower trading fees can significantly impact a trader's overall returns, especially for those engaging in high-frequency trading. In conclusion, the best crypto futures trading platform depends largely on individual preferences, experience level, and risk tolerance. MEXC, Bybit, Gate.io, OKX, Binance, Bitget, and AEVO each offer unique benefits that cater to different trading strategies. New traders may gravitate toward platforms with low fees and user-friendly interfaces, while experienced traders might prefer exchanges that offer higher leverage and advanced trading options. However, due to the high volatility and risk involved in crypto futures trading, it is essential to only invest what one can afford to lose. Selecting the right platform and understanding the tools available are key steps in navigating the complex world of crypto futures trading.